because the market has not been that interested in energy, right? It's an underperformer last year. It's an underperformer this year. Because these stocks are pretty cheap, the companies are buying each other. And as they're doing that, they're replenishing the inventory that they drilled up during COVID. They're getting bigger, which is important. Bigger companies are getting more attention from the market. They're getting more profitable, and they're doing it at 3 or 4 times cash flow. All of those attractive things. It's going to keep going.
Yeah, Dan, that's such a good point because, first of all, I want to point out, Paul, you wouldn't want to have been an M&A banker like a few years ago.
No.
There was like a whole lot of nothing happening. But the idea is if you're an investor or you're a pension fund or something, like you can't own a huge bunch of oil stocks. Like your investors are not going to like that. So it's like you have to gussy yourself up to be the top 1 or 2 oil players out there. So to that point, who needs to still buy stuff and who needs to be sold?
Yeah, I think if you look at all levels, companies are trying to get bigger, whether it's Exxon buying Pioneer or you move down into much smaller market caps. So I think that we'll continue to see probably 50 billion as a give or take the point of relevance for the broad markets. And so my expectation is folks that are below that are going to keep buying, trying to get to that size, and that folks that are sort of smaller than Exxon are going to keep merging. So it's kind of across the board right now, Alex. And again, these companies will keep buying each other until the market decides that they're going to buy the stocks.
And Dan, you mentioned that the energy stocks have been underperformers. What is the bull case out there for energy? Is it simply maybe just valuation here?
Yeah, the bull case is strong yields, very good free cash flow. The companies have turned into real businesses since the shale bust, and so they're throwing off a lot of cash, returning a lot of it to shareholders. The other piece is it is an inflation hedge. Nobody's thinking about inflation right now unless it comes back. And then you have this sort of geopolitical element, which is if things do spiral out of control, you're going to want to own some energy stocks. So there's a bit of a hedge, and then there's value. Those are the 2 arguments for the energy sector right now.
Do you think that oil producers will keep producing more oil? Let me define that question a little bit. Have they run out of the good stuff? And that's another reason why we're seeing the M&A. And I don't want to underestimate shale players because we know that innovation and technology is huge, but they have a lot of other stuff they need to spend on, particularly in the energy transition. So can we count on technology to make the rock good?
The answer is yes on the margin. There's another leg up in efficiencies that's been happening this year. I think the reality, though, is that U.S. shale is maturing. And what that translates to is likely a sort of an upward push on cost structures and upward push on commodity price. Remember, shale's now over much more than half of U.S. production. The Permian alone is 6 million barrels a day. That is a meaningful player in the global market. And so as those assets mature, there's an upward bias to price. Never count out ingenuity and efficiencies. But as this industry matures, we're going to see a slow upward push on cost and price.
And before I let you go, Dan, how do you think the election is going to affect big oil at all? I know that the talk is going to be like, we want oil friendly, blah, blah, blah. But in reality, they're not going to want drill, baby, drill, because they don't want to do that. They're going to tank the oil price. Materially, do you think the election matters for oil companies?
Simple answer is no, Alex. I think that these companies, it may be a little bit easier or a little bit harder to interact and run the business, depending on who gets elected. The reality is that politicians have proved that they want low gas prices. We're not punishing bad actors globally. We're letting them produce their oil. We want U.S. oil. We're not going to punish this industry too much. And the industry itself is not going to step up and get super active unless there's a price signal. So the election, it matters for sentiment and perception. I don't think it matters a ton for reality.